Hi, I'm Peter Rose, founder of Longwood Currency Trading. What makes a successful trader, Forex trader? Well, there's many. I just want to pick one of them because it's probably the most critical as far as I can see if you're going to be a long-lasting trader, not just a flash in the pan that's going to trade for a couple of years and then, you're going to give it up and take up pickleball or something. It has to do with understanding your trading metrics, your win-to-loss ratio, your average win value. Those are the two key ones that I work with. Now, you have to understand that your trading metrics are only viable if you're trading all in, all out. In other words, if you're trading 3 full lots or 3 minis or whatever to build these metrics, you go in with 3 full lots and you come out with 3 full lots. There's no staging or anything like that. You also don't compound during those periods of times when you're trying to calculate your metrics. Compounding affects the amount of money that you win and the number of lots that you trade. And so it's like one day you go and you're racing a car that's rated at such and such a capability, and the next week you race a car with different racing capabilities, and the week after that you race with a different set of capabilities. How do you really determine how good you are at racing if you're distributing your skill level or whatever over such a wide diversity of racing vehicles? And it's the same in learning how to trade currencies effectively, is that you have to know what your metrics are. How good of a trader are you? That's what the metrics tell you. I probably should have said that a minute ago, because all the goofballs are going to go, oh, he's just going to talk about psychology and I'm not going to watch him. And you drop rate to 30% of you guys that hang around long enough in these videos for you to get the real thing. I probably should have noted that earlier, is that your trading metrics give you an indication of how good of a trader you are. And if you are working with the correct metrics and you understand, you're working with somebody, a mentor that understands how to look at your trading based on those metrics, they can immediately look at your performance and say, oh, well, you must be failing here, because your metrics are based on the rules that you use in order to execute your trades, right? In my world of what I do and what I share with my students is what I call the life cycle of a currency position, which is entry analysis, position management, and exit methodology. Those are the 3 problems that you have to solve in order to have a good trading plan. A good trading plan leads to good trading habits, which then produce good metrics, which then tell you how good of a trader you are. And when those metrics vary, and there's 4 major metrics that I use, that based on that metric, it shows you where in the problem solution set that you're having trouble. And so as a mentor, I can say, well, I don't have to look at all your trades and see what all you're doing, because it's manifesting your metrics. So you're having a problem with this metric. This is the rule that controls that metric, and so therefore the failure is in this rule. You're not doing something correctly in this rule. Well, what happens over the period of time? Where do you see that your failure rate is? What's happening? What do you think is going wrong? Well, here's the point in the rule. Here's the condition in the rule, because the rules that I craft anyway are conditional based. It's not just, oh, when the short MA crosses the long MA, I do this. There's maybe 3 or 4 conditions. When this is true, I'm good. When this is true, I'm good with the rule. This is not true, I'm out. I just don't execute that particular rule. I don't enter, or I don't exit, or I don't whatever. All the conditions of that rule have to be satisfied. So when you say, oh, I've been doing this and I've been doing that, and yeah, I might be having some problems there. Oh yeah, no kidding. That's why that metric is bad, is because this rule, and in specifically the condition in the rule, that's the problem that we have to work on in order to improve your performance. Because you may have established a good win-to-loss ratio, and now that win-to-loss ratio is atrophying. But you can only do that if you're trading under the same conditions. It doesn't really matter the amount of money that you're trading. It matters more that the amount of money that you're trading is consistent, that you're trading all in, all out, that you're not compounding, and that you're using the same conditions in those rules, so that when you look at the body of data that's produced in your broker transaction report, you can look through those transactions. You can say, well, wait a minute, I seem to be losing an awful lot. Let me go back to those transactions, because the broker trading platforms will display all your past activity, right, on the chart. And you could go back and say, okay, on such and such a date at such and such a time, I lost. And this position was made up of 3 full lots, and I lost at this. I got in here and I lost here. This is where I had to get out. Well, what happened in between on the chart to cause that to happen? Well, maybe that one condition, maybe the third one down out of 4, that position didn't meet that condition. It should have been closed sooner, and you could have got away with a profit. Okay, the profit would have been much smaller than where your profit target was, but you came away with a profit. But in this instance, you didn't come away with a profit. And so how are you going to learn how to fix that if you don't understand where to go? So your trading ability is manifest in your trading metrics, which are a reflection of the rules that you've used, and in specifically the conditions within those rules, that either the rule is satisfied or it's not satisfied, in order for you to go into your trading and look at your transaction register and determine, are you following the rules the way that you think you are? So we can very easily delude ourselves and break that rule, and it's very subtle. Let's say you've got a hard and fast static stop rule, entry stop, and maybe 20% of the time you don't follow that. Maybe you give it 2 or 3 or 4 extra pips. Well, four pips is 0.4% on any size bank that you want to have. So where are you? Where's your head? I guess. Where's your head when you break that rule? What's causing you to break that rule? You know, because I had a 40-year career in real estate, where you do an awful lot of this upfront analysis, and then once you purchase that property, you don't get out of it in 3 weeks or 3 months. And I'm not talking about flippers. That's a really deadly thing that you can get involved in. Yes, you can make a lot of money. Look, you can make a lot of money trading at 500 to 1 leverage in currencies, but it's suicide. At some point, you're going to get stuck. That's real estate. But in any event, in looking at the real estate investment field, you buy and hold. That's what you do. And you know, I had a 40-year career in investment real estate. I've lost $1 million twice in my life due to economic collapse and deterioration in the real estate market. $1 million, my entire net worth gone. And it took me, I made that $1 million back each time, but it took me 10 years each time. I'd lose $1 million and I'd work, and the properties would appreciate back up. Because I understood the rules of the game. So although I lost money, I didn't lose the property. That's the difference. And so that is ingrained in my DNA as a trader, investor. You buy it and you hold it. You don't sell it. You let compounding in time take advantage. In currency trading, that's not so much the case, because the swings are so great. They're supposed to swing great because of the purpose of the currency market. This isn't the stock market. It's different. It's more powerful, but you have to understand the rules. And even though I understand those rules, this DNA-infused hold through all bad conditions gets me into trouble a lot of times. I'll stay into a position. If I'm trading light in my entry, $300, $500. Yep, I'll take that. Take that quick loss. But a lot of times, what happens, because I'm staging and building positions and stuff, I'll get a position built of 8, 10, 15 lots, and all of a sudden, you'll get this reversal. And unfortunately, because I've tried to stack my trades close together so that I don't have to cover so much distance to get to my profit target to take advantage of the full load there, my average position value comes closer to the current price. It goes boom, and I'm 6 or 8 pips down on a 10 lot. I mean, you're $600 down, and all you've done is burp the spread, and you're $600 out. Well, I'll sit with that. Now you go to 10 pips out, and you're in 15 pips out, and go, well, 15 pips isn't so bad. It's a big dollar value, but 15 pips isn't so bad based on whatever the shit it is that's going on at the time that I delude myself with. And all of a sudden, I'm 40 pips underwater on a 10 lot, and I go, damn. Well, I got to hold it now. I got to hold it and work my way out. And that's a flaw. I account for this in my rules and the conditions, but once you start staging and building positions and compounding lot values and all that other kind of stuff, you can't get locked in to those rules. You have to go to the next level of implementation of those rules. So when I work with a student for the first time, we start with $1,000 because I know you're going to lose until we figure out where your stride is and where your strengths are. And you play with that $1,000 until you get comfortable understanding what not to do. Once you understand what not to do, you can build rules to assist you as to what to do. I mean, it's a process. You don't just read a fucking book or take somebody's PDF course and all of a sudden you know how to trade. That isn't the way that it works. And if you're not working with someone who is teaching you these steps, these organizational steps, how do you expect that you're going to be able to learn how to trade? If you're learning how to drive a car, and the guy who's teaching you says, let's get on the highway real quick and let's see how fast this puppy can go. There's no traffic out. The weather's good. Let's go 80 miles an hour. Let's try to see if we can get 100 miles an hour out of that. I mean, does that make any sense? Is it a lot of fun? Yeah, sure. But that's not how you learn how to drive. That's how you learn good characteristics. When I took my kids out to learn how to drive, it's usually in the wintertime to get into school and they get into driver's ed and all this stuff, and so it's snowing out by the time, or because I live in New England in the United States, so it starts snowing. And I would take them out and test drives. We'd go to a large parking lot where the snow had been piled up, and I'd say, let's get this thing going 20 miles an hour and hit the brakes. Let's see what the car does at 20 miles an hour. Can you imagine what a spin out you'd have if you were doing 30 miles an hour? Can you imagine, drive the car and hit that snowbank up there? Can you imagine what that would feel like if you were going 40 miles an hour, or if that was another car that didn't have the pliability of a snow pile? It's these little steps that build confidence in your driving, and it's those same sequential steps that you need to build in order to develop good rules. And good rules keep you out of the shit, keep you out of the deep woods. I mean, I talk to so many people, they don't get this, they don't understand it, and then when I tell them that it's going to cost you X amount of dollars to fix this problem, and they go, and they start bitching at me. So, well, excuse me, you're trying to learn a skill to learn $30,000 a year until you can build up a larger bank so that you can make $100,000 a year off of your trading and retire and quit your day job, and you want me to teach you that for a couple of $1,000 or $500, or you don't want to do any work, you just want to read some, we had a cookbook writing guru called Betty Crocker back in the 50s and 60s, I think it was. And, you know, you just follow the Betty Crocker recipe and boom, you get chicken whatever, you know. And it was okay, but you follow most recipes and they're just very bland. I follow a recipe as a suggestion, and then I add spices and I do things to it because I know how to cook. But I couldn't do that when I was learning. When you're learning to trade, you need to learn how to trade, not how to push the pedal to the floorboards and drive that fucker into a brick wall. You just can't do that. So your success in your currency trading journey is going to be based on how good of a foundation you build such that your rules produce metrics that indicate to you that you're following your rules correctly. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.